How are we doing so far? Good. All right. We are going to go over a bunch of stuff. And we're also, we should have about 15 minutes at the end of this for questions. We'll do our best. And I can share some thoughts with you on that topic as well, and the BAC strategy with it as well, because it's a tricky situation, but one that we are working on. That's me. That's Rachel. Rachel stepped in as executive director a couple months ago. She's been rocking and rolling, as you can see by how well everything is running at this event. But Rachel is not just brand new to the job. Rachel's been part of the BAC for quite some time. And before she stepped in as executive director, she was a BAC employee, handling all the back end stuff. She's still rocking and rolling. And before we really get into it, everyone just thank Rachel for stepping up. Yeah, thank you.
Thank you.
All right, so why are we here? And why do we need to be here? There's a lot of reasons. Some big reasons, some small reasons. The biggest reason, and the reason that is at the core of my passion about all this, is what happened to brokers in the fallout of 2008. Dodd-Frank has been brought up a lot in this conference so far, and brokers were largely left out of the conversation when all of that was happening. And I'm going to tell you there's a lot of reasons why, but there's one very, very big reason why. But I was in the industry. This is my 20th year in the industry. But I wasn't down here. I wasn't paying attention to stuff. But I've talked to enough people that were. And what I largely hear is that when we were the brokers weren't down here advocating this and that, and that's not actually true. They were. That wasn't the problem. The problem was they got here in 2008, but we weren't here regularly in 2007, 2006, 2005. And DC is like any other business. Relationships matter. You need to be there constantly. And to be there constantly and to have people's attention, you need money. Showing up when the house is already on fire and everyone else that has relationships with these legislators and regulators is saying it's their fault, and it was a very easy story to pitch, and it sold. And brokers saying, no, it's not our fault. I don't know you, man. Everyone I know is saying it's your fault, so you're going to take what you're given. And the brokers at the time, they did a great job making it, it was bad, but it could have been a lot worse, and they did. But the reason why is money. This is PAC contributions. MBA, ABA, NAR, NAM. NAR makes everyone look small in comparison. MBA, so it goes by congressional year. So 2007, 2008, 2009, 2010. They raised, 1.7-ish in their PAC. ABA, 4 million. NAR, 1.3. 10 million. NAM. It's like 300,000, and then it dropped off a cliff. As soon as the shit hit the fan, everyone ran for cover. That can't happen. You want to know why retail gets to do this, why we have different LO comp rules that are total nonsense and completely unfair, why there's an unlevel playing field? That is the reason why. These other smaller reasons, but that's it at the end of the day. And what I said earlier about brokers, I truly believe brokers. They told someone to F off. They are hard chargers. We are aggressive, and it is why we are so good at what we do. Also doesn't always lead to the most altruism in the world. I'm speaking to an audience that you guys are here, but by and large, brokers are not just going to give money away. It's the biggest group of capitalists that become the biggest group of socialists the minute you ask them to pay for something they don't think they should have to. It's true. And we have done a lot of progress in a short period of time. We set a record for one day. We raised 90%, 95% of that in 24 hours. We raised over $350,000 when we launched our PAC 3 years ago. A lot of you were there for that. Thank you very much. But we know the market's turned to shit, and we haven't really pushed you guys and brokers in general on stepping up and supporting this work. If you want it, you got to pay for it. We have unbelievable lender partners that have done an awesome job in supporting us getting off the ground. But it's time for brokers to start stepping up again. We have put our foot off the gas in acknowledgement to what the market's been like for everybody. And in the beginning, most of that money was raised $5,000 at a time. I see a couple of you. Thank you, Todd. Thank you, Scott Valens. Thank you, me. Thank you, my wife, for that. But it doesn't take big chunks. One of the advantages that we have, there's a lot of us, and we are passionate. We care about this stuff. So the new fundraising pushes is going to be for much smaller amounts. I want to see a bunch of phones scanning this right now. even 10% of the brokers out there gave $5 a month, that chart I showed of all the imbalance earlier would be flipped. We would be right there. And we don't need to raise as much as NAR or MBA. We can do a lot with less. We're more nimble, we're smarter, we're more aggressive. We have a ton of huge advantages, including the fact that like, we're as close to the consumer as any of these politicians are gonna get without knocking on doors. I love the MBA. We are in a coalition with them. We are on the same page with them all the time. They do not know the borrower experience like you guys do, and that is what politicians care about at the end of the day. It's exactly like Jamie said, your personal stories matter. We're gonna be careful about what stories we share, and I'll talk about that in a second. But like, we have so many advantages over these much larger groups and institutions, and there's an advantage to being the new kid too. Jerry said, I've said forever, we're fighting for the seat at the table, and Jerry said it very well that like, we're at the table, we might be at the kids' table, but like, first of all, the kids' table is really fun. Also, you can make a lot of noise from the kids' table, and you have to be accounted for. And if that's where we're at right now, I am totally good with that, because it's better than where we were before, which was completely off the radar. So you're gonna see more and more pushing from this. I know I'm talking to the best audience for it. I'm asking you guys to give, but what I'm really asking for is get other brokers to give. Get them to give $5 a month. That is it. If they like the work that we're doing, and they don't have to like everything that we're doing. I've told everyone a million times before, I will answer any question that anyone ever has. I'll answer it publicly, I'll answer it privately, I'll answer it anywhere. But if you agree with 80% of the work we're doing, you should support it, because no one else is doing it to the level that we are.
On that note, real quick, I would like to give a shout out to Peter Carlin. He was our first monthly donor that signed up when we started sending notices out. He also, I think, got 10 people to sign up and come to Advocacy in Action. So big thank you to Peter for supporting us, spreading the message, getting your friends to come. Everyone be more like Peter, okay?
And you can trust us with it. And Rachel's going to talk about, we're going to be making a much bigger push on transparency, where the money's going.
So a little bit about me. I have a passion for details and numbers, unlike I think Brendan sometimes. He just wants me to tell him it's getting taken care of, and then he says, okay, cool. I, on the other hand, I want to know what's going on behind the scenes. And so one of the big things we're going to really do this year is we're going to get that budget out to you guys, like detailed budget. We're going to share our bylaws so that y'all know what's going on with the organization. If you're going to support us, you should know. This is just a simple kind of idea breakdown of our budget. It is not the full details, but it gives y'all an idea. When spending $600,000 last year, 48% of it went to our lobbying. That means majority of our money is being spent to get us the meetings on the Hill, to get us in those rooms, to get us the conversations going, so that we can talk to the right people at the right time about the right stuff. So when you think, well, where's the money going? That's where it's going. It's going to those relationships that Brendan gets to come in and say, hey, we're the BAC and this is what we do. But he needs someone to open that door for him, and that's...
They're worth it. Kevin's right there from Forbes State. You guys are going to have an opportunity to meet all of our lobbyists from Forbes State today and tomorrow. They're awesome. They're expensive. They're worth it. And push them for the money. We do. I say they're my favorite paid friends that we have. But they're worth every penny. And we said we're not going to be your easiest clients. We're going to squeeze every single penny out of the money that we pay them. But we'll be fun. And they are our superpower. In addition to having a good message that people want to hear and they're not hearing otherwise, they are the reason that we have been able to move as quickly as we have. So when you see them, go up, ask them questions, tell them thank you. They should say thank you to you, but they're awesome. Yeah.
And then the other breakdown, you'll see payroll, staff. We have a great team, and we've been expanding our team in the last, I say, 6 to 12 months to really, the marketing, I think it's awesome. I think Brendan thinks it's awesome because it's his wife, Jen, that takes care of it. But she is great at her job. A lot of the social media that you're seeing is coming from her. So like, we are building out a team to be able to do some of these things for you. So that's that part. You'll see that this event here, Advocacy in Action, is a good portion of our budget as well. So just keep that in mind too when we are pushing throughout the year for money, is because of things like this that we can bring y'all to DC, that the money helps with that. The miscellaneous and travel, I mean, those are small parts of our budget, but miscellaneous, I mean, really just everything else.
Subscriptions, whatever.
Yeah. So, but this was just kind of to give y'all an idea of like broad numbers, right? We are going to be working on getting it's not a tax return because we're a nonprofit, but our financials filed for 2024 so that they are publicly available after we file them. You can still go to this website and see our previous filings. Any nonprofit, their documents are available online as far as their financials. So if you're ever curious about somebody, what the organization spends their money on, how much they bring in, how much it costs them to run, you can go look that up. But we will be more transparent about it as well. On the PAC side, so the BAC is the previous slide where you can find the financials for that. The PAC, that's the Political Action Committee, we have to file monthly reports of what we bring in and what we spend that on. So this fec.gov website is where you can go and see every report we filed. This is where Brendan and I pulled those numbers to show you the contribution. It is legitimate numbers that are filed with the FEC by any organization that is a PAC. So.
And just a reminder, there's a BAC and there's a backpack, obviously very related to each other, technically two separate organizations.
Yes.
And it's because of like how money in politics works. So the BAC is always first and foremost. When you're talking about the stuff we're doing here, talk about the BAC, okay? And the money that you give to the BAC, first check with your accountant, tax deductible, but it goes towards paying expenses, lobbying, payroll, yada, yada. The backpack, not tax deductible when you give money, but the dollars go so much further because that's money that we can give to political re-election campaigns. Do not talk about the BAC at all tomorrow on Capitol Hill. You'll hear that over and over again. Do not bring up money on Capitol Hill.
Yes.
The backpack, that doesn't get brought up in any of these meetings. Money we raise, no. But that is money that we give to re-election campaigns and opens doors, gets their attention. I think people overstate the influence. Money in politics is not all that matters. It matters a lot. Having the right message still is incredibly important, and having truth and all those things, but oftentimes you do need money to get your message in front of politicians, and that's what we use it for.
That's what I would say is the most important aspect of it, is sometimes you need that to get in that door, so keep that in mind. The one thing I really want to talk about as we go forward into this year is my goal for the BAC is really to get us structured, get us organized, and be transparent about what's going on. We have great councils that are set up, veteran homeownership, Black homeownership, Hispanic homeownership, and the state captain program. They have great leaders in them. But I think we need to get the structure there, and that's one of the things I really want to work on after this event is making sure the leaders of those councils and programs have the right setup, have the right structure, so that we can do more with less. You know, that's what we've talked about, but we want to make sure that if you're volunteering your time to help us, that we have a system up in place that you know what you're doing, where you're doing it, what you're saying, how you're helping. One of the things that in the state captain program we've been working on is a playbook, because I know when it first started, people were like, well, what do I do now? And, oh, I scheduled a meeting, what do I say? So we're really gonna work on things like playbooks to really break it down to say, hey, when you schedule a meeting, this is what you need to talk about, create an agenda, and go over some of those things so that you don't have to, we're taking the guesswork out of it for you, right? We're gonna give you the tools, you just have to show up and do the work.
You mean you're gonna be able to do some of this stuff when you jump into the fire and have an event to plan for the entire time?
Yep.
No, it'll be good.
It'll be good.
Okay, let's talk about some issues. Trigger lead. Trigger lead bill is going to be at the top of what you guys are pushing for tomorrow. Currently, this could change, but the current plan is that the bill is going to drop tomorrow morning. That can, yeah, there you go, Jerry. That can change overnight, right? Like, and it's something we have no control over. So we should have a bill number for you guys to talk about in these meetings, and we'll talk about this more. The trigger lead bill, though, even if we don't, it's fine. The trigger lead bill is a known quantity. Most offices that you're going to talk to are at least a little bit familiar with it because of how close it came last year. But we should have a bill number. There's going to be a press release from all 4 co-sponsors, 2 on the House, 2 on the Senate. Hopefully the BAC is quoted in it, which will be really cool and something you can point to as well. We have announcements ready if it does happen, so know that. All right, let's talk quickly about what happened last year, or last Congress, 2 years, and what's coming up now. So just a reminder, congressional sessions, 2 years, right? And someone yesterday mentioned like watching the like how a bill becomes a law video, unbelievably helpful. Like I'm telling you. So last session ended at the end of the year, and now we're in a new one. Technically, all bills need to be reintroduced. You're technically starting from scratch. You're really not, though. So last year, we came goddamn close, so close. Closer than I even knew or said publicly. Like, it was hours away from actually happening. It passed in the Senate unanimously. The harder chamber to pass legislation in, trigger lead bill passed in. It happened. There's a bunch of pain-in-the-ass senators. Even they didn't say anything bad about it. And it came really, really close in Congress. It was almost attached to the defense bill, got pulled out at the last minute, and then still again, almost went into the continuing resolution bill, the budget bill. It was hours away from happening, and then it didn't because of nonsense, but whatever. What I want to say with all that is, people, well, were you disappointed? For about 5 minutes after I found out it wasn't happening, 5 minutes. And then I got perspective that all of you should have as well. Passing federal legislation is insanely difficult, and frankly, it should be. It's a big deal. It impacts a lot of people's lives. Do I think it should have been as difficult to pass trigger lead legislation last year? No, I think it should have happened, but like, boo-hoo, I'm not gonna, the bill went from no support whatsoever to 136 co-sponsors, bipartisan co-sponsors, so bipartisan that some of these people would not spit on each other if they were on fire. They've never agreed about anything in their life, and they both agreed that trigger leads are bullshit. We made a ton of progress. This is a list. We had over 200 meetings on this legislation on Capitol Hill in the last 2 years. This is a list of every single meeting and the day we took of people that became co-sponsors. This is tangible evidence of unbelievable progress that the BAC had, MBA had, all the other groups advocating for this. We're rowing in the right direction. We came really close, and we're going to get there this year. We have a lot of things going for us. There was 2 members of Congress that were a problem last year. One had a very large Experian headquarters in her district, but also has a very big mortgage broker's West Capital in her district that's going to be weaponized this year. The other was unfortunately the chair of financial services, not the best spot to have a problem, but he retired, and I wish him all the best. We have a new chair of House Financial Services. French Hill, if you came to Advocacy Action either of the last 2 years, 2 years ago you saw him speak at Advocacy in Action. Last year he came to the party. French hates the credit bureaus, and I love him for it. He was one of the first co-sponsors. So like last Congress, the bill got introduced twice for reasons that don't matter. He was one of the first co-sponsors both times it got introduced. He loves this legislation. He hates trigger leads. He is in charge of House Financial Services, which is the committee where this bill sits. A couple months ago, Rachel and I were down here in DC meeting with all freshman members of House Financial Services Committee, so new Congress members, not just new to the committee, but new period. All of them were like, yep, we heard from AiA, this is a priority. This is a very, very good thing. 129 out of 136 previous bill co-sponsors were re-elected. That's awesome, and those 7. I actually do wish those 7 the best. Everyone's sick of the credit bureaus, so up until the last minute, French Hill and other members of Congress, you're going to meet 2 of them tomorrow. Timmons out of South Carolina and John Rose, who's one of the original sponsors of the bill. They fought until the very last minute on this bill. When it got pulled out of the defense bill, largely because of the previous chair, they went right over his head to try to get into continuing resolution, which they're like, screw him, he's retiring, I don't need to make him happy anymore. They went right to the Speaker of the House, Mike Johnson. I asked our lobbyists, I'm like, is this normal? This is awesome, but like, why are they really putting their neck out on this bill? And a couple different reasons, you never know exactly, but like them being sick of the credit bureaus is one of them. We're all sick of them, everyone on DC is, everyone's sick of them, and that's great. There are going to be new problems. We don't know what all of them are going to be yet. I do know one of them, and that's it. Last year, the credit bureaus were able to sit on the sidelines because the bill had been introduced 2 previous Congresses and went nowhere. No co-sponsors, didn't get markup, anything. And they could just sit the sidelines and not say anything because it wasn't going anywhere. Why do they have to pop up and be the bad guy if it's not actually going to happen? And then at some point last year, they realized that this bill was getting momentum and they needed to do something. That's when they kind of stepped up and started pushing against it. We're not going to mention names tomorrow, But I will right now, Experian is the problem. TransUnion and Equifax are not. There's a letter that they've been floating around that Kelly Williams, who you'll meet, will not let me put up there, but if you ask me later, I'll show it to you on my phone, that they've been floating around saying, hold off, we're trying to compromise. They're not. Phone calls are really the problem. We can address it. Phone calls are not the problem. Trigger leads are not the problem. Trigger leads are a symptom of the problem. The problem is, and this is really important because you guys need to be saying this because we're going to undercut their argument because their argument's bullshit. Before we could just be like, look at how invasive this is, a nuisance, this and that, da-da-da. We need to get very specific about what the actual problem is. And the problem is that credit bureaus, who are privately owned organizations, are permitted to sell consumer data without their permission. Who on earth could argue that that should be a thing? Nobody. Even the credit bureaus can't possibly argue it, not in any good faith whatsoever. They try to make these arguments about this would reduce competition and yada yada, which, and you're gonna see, you guys have a bunch of handouts, we're gonna go through some of them.
This is one of them.
This is one of them. So that is why the focus, the problem, consumers sold data without consent, the symptom, trigger leads. Everyone knows trigger leads, that's a phrase everyone knows. We need to refocus them on the actual problem. And the reason that they're allowed to is the Fair Credit Reporting Act was passed in 1970. Slightly different world to today. For consumers to get mortgage quotes in 1970, they had to go from one bank branch to another. So trigger leads were a way for them to get email solicitations because closing a transaction took 90 days. It took 30 days to pull a credit report in 1970. We're not in 1970 anymore. I could argue that credit bureaus never should have been given this privilege, but at least there was a justification for it in 1970. That justification does not exist anymore. It's not just time. You won't see trigger lead reform from us anymore. We're not using that kind of language. It falls too much into their argument. We're getting rid of them. There's exceptions to the bill we'll talk about, but like, we are getting rid of them. There's no reform happening. They should have never had the privilege. There's no reason to have it now. They've completely abused it. Time to rip it from them. These are topics that you're gonna see us talking about more and more. I talked about we're gonna get more aggressive. It's not just with the trigger leads. The credit bureaus and FICO have just been holding us and consumers over the coals for far too long. 700% increase credit score costs. It's nonsense. This is stuff we can talk about with the offices tomorrow, drop it off for them, just make them generally aware of the nonsense that's going on, but you're gonna see this stuff on social media a lot more. This as well. I'm sick of title insurance costs. It's nonsense. It's absolute nonsense, and we're the only industry group that's saying anything about it, and that needs to stop as well. Title insurance. Of all the premiums collected, title insurance claims that are paid, 4% of premiums collected. That's a racket. Life insurance is 50%. Auto insurance and home insurance, not the best one to point out right now because it's a disaster, because they're upside down. They pay out more in claims than they're collecting in premium. 4% title insurance. Here's the cost of lender's title insurance premium, average, and I forget what the loan amount we did, $500,000 loan amount in all the states. You're gonna see this out there more. Title insurance, they're skating. Title insurance is necessary. Title insurance should exist. It shouldn't be a racket, and that's what it is right now. TPO, all of our loans are TPO, third party originated. Any loan that is originated by a loan officer that does not work for a company that sells directly to Fannie Mae and Freddie Mac is TPO. All of the lenders we work with sell directly to these lenders, but the fact that we don't means that it's TPO. Any small lender, credit union, bank, they're TPO. This is something Jerry and a lot of other volunteers have put a ton of work into, and we're gonna get out more and more. We have more resources helping compile the data and update it, because this data is a year old. Right now, every single loan that you guys originate with Fannie Mae and Freddie Mac is priced 15 basis points worse than it should be. When Fannie Mae and Freddie Mac buy these loans from the lenders, there's a 15 basis point pricing adjustment because we are TPO, because we're brokers. And that's really the truth of it. It all came out of, they've shown us the data they used. Brokered loans are riskier. It's nonsense. They pulled data that goes, what was it, from 2015 to 2004. And I was like, anything pre-Dodd-Frank is completely irrelevant. So we have new data. They wanted a catastrophe in it, and the financial crash was in it, we have COVID. That shows forbearance numbers.
All of those two fall, like these three the topics, fall under housing affordability as well. And that's something you're gonna hear a lot of groups talk about as well. You know, these costs that the borrowers are having to pay when they're buying a home, are getting outrageous. So how can we make it more affordable for somebody to purchase a home?
And these are not, you're gonna see us pushing on this more and more, not stuff you need to be bringing up tomorrow, but like an excellent point is brokers work with minority and first-time home buyers at a significantly higher percentage than non-broker channels do. I do not think that this 15 basis point surcharge was put into place to hurt those borrowers, but that's exactly what it's doing because it gets passed along to us, it gets passed along to the consumer, and it's nonsense and it needs to stop and we have the data to prove it. And if you don't think this is important, take whatever your production was last year, figure out whatever percent is conventional and do 15 basis points of that. It's a lot of money. It's a lot of money that you guys are losing, that your borrowers are losing. You could all increase your comp by 15 bips on conventional loans if we get this fixed. This is a quick overview. This is gonna be fluid. As bills are getting introduced, it shows what we're gonna be focused on. Tier 2 under legislative Meeks bill, it should be introduced soon. You'll hear more information from us. We're not gonna talk about tomorrow because there's not gonna be a bill number yet, but this would allow mortgage insurance to fall off on FHA loans while they're in process. There's millions of homeowners paying hundreds of dollars a month mortgage insurance, which is foreclosure insurance, when they have 50% equity. There's no risk of foreclosure or foreclosure loss. It's nonsense. It needs to be fixed. And consumer groups aren't going to do it. We have a responsibility to advocate for just the betterment of our channel, even if you do one or two less refinances over your life because you're not going from FHA to conventional. I'm not going to go through all of these, but you can see a lot of them on there. CFPB reform, LO comp. Right now, really good time to fix some of this regulatory stuff. As all the regulation is getting pulled way back, there's an opportunity to fix LO comp. The APR calculation is broken. It is broken on borrower paid compensation loans. Lender credits do not count towards the APR calculation, and they absolutely should. We have shown the CFPB LEs of a borrower paid compensation loan side by side with whether you want to say it's lender paid or retail or it doesn't matter, where the rate is lower and the lender fees are lower and the APR is higher. That makes no goddamn sense and it needs to be fixed. And we're gonna start pushing on it. And you know, CFPB might not be doing as much as they were last year, but they will be much more interested in a conversation like this in this environment than they were previously. All right, this is what the homework for tonight. Talking points. We're gonna be pushing two things. Introduction to the BAC. We are still a new entity in DC. We've made a lot of progress, gotten a lot of headway. It's important that you explain what the BAC is and what a mortgage broker is. Even if they tell you they know what a mortgage broker is, they don't. The head of the VA said, oh, my wife's a mortgage broker. 5 minutes later, he's talking about she's one of their top loan officers of one of the biggest local lenders. I'm like, God, do I tell this guy he doesn't know what he's talking about? No, he's the head of the VA home loan. Has no idea. Just tell him. And here's how you tell him. Don't forget the narrative of broker and retail online. That's so unhelpful. Think small business. We are the small business leg of the mortgage industry. Typical mortgage brokerage, 3 to 5 people. If you see a TV, radio, internet ad, probably not a mortgage broker. Think Chamber of Commerce, youth T-ball. We are deep in our communities. That's not only the truth, they're gonna love it. That means that we know all their constituents. Mm-hmm. We're aligned with other industry organizations, but we're gonna bring a different perspective. We work directly with borrowers, and you'll get as close as possible to the consumer's perspective without knocking on doors. I will tell people in meetings all the time, I was just talking to a pre-approved borrower in the hallway, going under contract, and it's true, I'm not making it up, right? I'm doing it in between stuff here too. We're all out there originating, and that is insanely important to remind them. It's also something that other groups, it's not as true when they bring people to the Hill. It's a lot of managers and things like that that are steps removed from the borrower. So tell them about the BAC, tell them how amazing we are, tell them how amazing mortgage brokers are, that we went from 70% of the market pre-2008, single digits after the crash, now we're back up to 25%. 1 in 4 loans is originated by a mortgage broker. We deserve a seat at the table. Trigger leads, we just went over all the language for that. That is how we're gonna open it. And you can ask them, do you know what a trigger lead is? They're gonna say no. And then say, I'm gonna explain what they are in a second, but first and foremost, you need to know that trigger leads are not actually the problem. This is the problem, ba-boom, ba-boom. FAQs you're gonna get, you don't need to bring this stuff up, but if you get it, don't trigger leads, consumers save money sometimes because of trigger leads, because that's an argument the credit bureau puts out there. They won't release any data to support it. Imagine you're at the doctor's office, you get a prescription for a medical condition, maybe even an embarrassing one. As soon as you walk out the door, your phone rings. CVS, I can save you 10% on your prescription. As soon as you hang up, you have a text from Walgreens and a voicemail from Rite Aid, all the same. Would that result in consumers saving money on prescriptions sometimes? It absolutely would. Does anyone want that? No, of course not. You can't just say this is in consumer's best interest and take that argument to any extreme, and that's what trigger leads are. It's absolute nonsense. Do mortgage brokers use trigger leads? Some do, but less than you'll see in other channels. To effectively use trigger leads, you have to secure operational scale, speed to dial, yada, yada. There are large brokerages that use it. None of them like us, but it's really not as big of a thing in the mortgage broker channel as it is in others. And if they have concerns about them or whatever, like even the brokerages I know that do use them, they know this is coming. It'd be the worst run business of all time to not have a backup plan if you can't use trigger leads anymore. Why are the exceptions important? You can bring up the exceptions, you cannot. Sometimes I do, sometimes I don't. But it is important that you guys understand why, especially the mortgage servicer exception is important, because it's not always the most popular thing in the industry. It's important because it's important to the consumer. And here's why it's important to the consumer. Mortgage servicers are an incredibly important part of our business. They're a boring part of our business, but they're insanely important. They provide liquidity for everyone else. It's the reason that non-bank lenders are dominating the mortgage space instead of banks. And that is a good thing. We want that. Banks don't like brokers. Think of it from their perspective. Their business model, they service all of these mortgages, they collect interest on it. The way they profit is they collect interest and the amount of time that it stays on their books, okay? The amount of time it stays on their books is honestly more important than what the interest rate is for profitability. One of the ways when interest rates drop and refinances start happening that they protect these assets is trigger leads, okay? If they lose the ability to protect, or part of the ability to protect their assets, what's gonna happen? The value of that asset is going to decline. They are going to pay less when they are buying bundles of mortgages in the future. What will happen then? It will be reflected on the rate sheets, and then it will be reflected back to us, and it all gets passed to the consumer. Either the interest rate that the consumer gets will go up, or the cost to originate the mortgage will go up, and they will pay for it. That is a very bad thing. They already have access to their data. There's no privacy issues. And for all of you guys, you went from a situation where you pull credit and you're having 1,000 people call to 1. And like, it's your client, it's their client too. We can't just get literally our way to make it perfect for us on everything. That's not reasonable. Not only is it just wrong, but no one's gonna take us seriously if we act that way. Mm-hmm. Regulatory environment, great time to go after stuff. LO comp rule, 15 basis point surcharge, APR calculation. The 15 basis point, we're gonna start having more, we've had some already, we're gonna start having conversations again with FHFA about it. If they're not receptive to it, we already have politicians that are ready to ask them about them in committee hearings. So we have this prepared. What else is coming? Here's the Meeks bill I talked about earlier. We were deeply involved in this. It was actually, they were asking for questions when the FHA director was in front of House Financial Services last year. And when that happens, we pitch questions. One of them is, why doesn't, because FHA is sitting on way too much money right now. They're like 700% over what their required reserves are. It's time to start giving some of that money back to the American people. This is one way to do it. So we proposed the question to the office. They asked it. That was really cool. And the FHA director said, I'd love to see something on that. And they introduced the bill at the end of last session. They're reintroducing it now. Really, really cool. The BAC had a big, big part of this. There's going to be a housing package come together. Senator Scott, the chair of Senate Banking, and Elizabeth Warren are going to be putting a package together. There's a possibility the trigger lead bill will go into it. I don't know. There's positives and negatives to that. Don't bring any of that up tomorrow. Ballot Act, Lynn. I love Lynn. Lynn's the best. Say hi to Lynn if you haven't already when you see her later tonight. The Ballot Act, awesome, awesome bill. Not enough veterans are using their VA home loan benefit. Once again, we advocate for the consumer. We advocate for veterans. Brokers typically have sharper price on everything. All of you know that is especially true on government loans. If brokers are better on pricing, they are way better on VA loans. The more veterans doing second looks and saying, well, maybe I should ask someone else if I should take advantage of my VA benefit, the more likely they are to call you.
All right. Do you want to do questions?
Yeah, let's do questions.
Okay.
Who's got a question?
Anybody? Anybody?
Let me. Can I address your question from the previous panel first? So, We're in alignment with that. We do need to be careful about some of this stuff and how much we say publicly. There's a new administration that is wielding power very effectively, and we want to be careful about pissing them off. But we are very much having conversations behind the scenes to not only consider, I don't think rewinding it is going to happen, but making sure it doesn't spread to VA is our current focus on that issue right now. Does anyone else have any other questions? Nothing. Someone be first. Jerry, you always have a question. Come on.
How do you differentiate between lobbying and advocacy? The two terminology, two different angles there.
I don't know if I do.
Different angles. How do you differentiate? What are the pros and cons of lobbying versus advocacy?
I don't know. I think it's two different words. You can have them mean the same thing if you want to. Lobbyists lobby. We advocate. Sure.
So how we can differentiate that process? You are a grassroots advocate.
Well, I am being paid. I want to be very clear about that and transparent about it. I was part of that salary chart that you saw. And over the last 4 years, I've been paid sometimes and I've not been paid other times. Happy to be completely transparent about that. But as a group, we are all out there advocating. Being a registered lobbyist means something. Kevin is a registered lobbyist. None of us are. And I'm happy to talk to you more about it later. I do think we can go down a technical route. I'm not sure how much it's going to matter for people out there getting after it, but I'd love to talk to you more about it later, for sure.
Thank you.
What you got? Someone join Matt at the front. Why is he in front of the class all by himself? Come on, guys. And Jamie, they're great. Sorry, go ahead.
We can tell.
With the privatization of Fannie and Freddie looming, it does sound like that does put quite a bit of strain on housing for all, especially with affordability programs. You're going to start to see more pullback in risk. What is the BAC stance?
Good, thank you. And I meant to add that to FAQs. So write this down. And so there's going to be issues. There's a lot of issues that, I'm sorry. On Fannie and Freddie coming out of conservatorship, what's our current stance on it? So there are a lot of issues that I have individual personal opinions about that are not going to completely align with how the BAC is going to advocate, because it's not the Brendan McKay show or the Rachel show or the Matt Blackmer show. It is all of us, collectively, opinions. We will do our best to educate and advise, but at the end of the day, what matters most for brokers and consumers is what we are going to go forward with. Don't bring it up on meetings tomorrow. You might get asked about it. And our current stance is, well, it depends. Because we can talk about Fannie and Freddie coming out of conservatorship. That's great. But what is the new system look like? And there's a lot of nuances for that to figure out, which I'm sure KP and Phil talked about a lot. And they also did a Facebook Live on it in the last month. I would highly recommend you go listen to it. How exactly is it going to work? Implicit, non-implicit? Will there still be a government guarantee? This and that, all these things. One, we know when there's real plans being put out there and pitched, there's conversations happening, but not at a high enough level. But it's like, okay, we could do A, B, and C. That is when we are going to weigh in with more hard opinions, is that right now we're watching it very closely, but until we know what the actual plan is, we're not going to feel strongly one way or the other about it, other than right now, there's a housing crisis. And there is a lot of disruption happening, but the mortgage markets are stable, and they have been for a long time, and we're generally in favor of stability. So do we think that some reform could make sense? Yes, absolutely. But reform and a buzzsaw are two very different things, and we want to make sure that if any changes are made, they're made intelligently and go from there. And right now, I do think more conversations are going to happen. The administration has said until a tax bill passes, they're not going to be pushing hard for this. You can see some things they're doing that you could say they're probably doing this because it makes it better to privatize, yada, yada. You read the tea leaves and all that. But I don't think anything's happening imminently enough that we need to get aggressive with any messaging on it. Yep.
So with the trigger leads, is there any, we have all these disclosure forms. I was talking to Lynn earlier about the Talent Act there, didn't even realize some of these things that are not disclosed or disclosed sometimes. So is there anywhere at all hidden in the fine print where a credit bureau is saying you are giving us your permission to
So that's going to get, so the new bill, which we've seen the draft of, has opt-in language. So right now it's an opt-out system. You have to proactively opt out of trigger leads, and we know then even sometimes it doesn't work the way that it should. Now everyone's opt-out, and if you want to opt in to receive trigger leads, because you're a lunatic, then you can. Now, it's a very fair question and something that we've had conversations with House Financial Service staffers about. When I saw the draft, I was expecting more specific language on how the opt-in function would work. It's vague at the moment. It's in there, but it's something that will probably be handled once the bill passes by rules making committees. So bills get passed, and then this is a good question for the lobbyists, honestly.
Not the proposed, but like as it actually stands in the disclosures right now, is there any kind of hidden language?
I don't think there's anything like when you pull some credit.
But something we're concerned about is that this passes, and then Credit Karma is able to sneak something into their disclosures. When you sign up for Credit Karma, you're accidentally opting in. That's something we are very vigilant about, and we've had conversations about it, and they're like, the staffers were like, well, how are people going to, we don't care if people use it, but how are they going to know about the opt-in language? Would you be okay if the credit bureaus emailed the borrowers right after their credit was pulled? Absolutely not. No. Experian pays for their BS Experian boost and sells ads on TV for that. They can do the same with this if they want to. No, absolutely not. So like, there is not language in there right now allowing it, but it's not firm enough either. Although that being said, what is going to happen is the bill is going to pass, and then most likely the CFPB will figure out how implementation will actually work. But we're all over it, no doubt. Good question. All right.
Lunch. It is going to be in the room next door. There are tables set up. On those tables, there are papers. I don't know if they're on every table or not, but they are going to be your Hill group people. So go, if you have been signed up for Hill meetings and you registered and I asked you for your address or something like that, you are going to be for sure signed up. If you get in there and do not see your name, don't worry. If you are staying and want to try to get in on Hill meetings, come see me. I will be at the back of the front of the room by the door or something, so that I can get you put into a group. If you are not staying for Hill Day, or you are not wanting to get in on meetings, but you're gonna hang out, join a group, talk to them, help them out. If you've done this before but you're not staying, give them some advice. There's gonna be some groups that maybe have somebody, like all of the people have never done this before.
No, that won't happen.
So
I will go with you if that.
yeah, but it's when they're sitting at their table, they might be like, well, I don't know what to do. The point of the lunch, though, is we wanted y'all to meet your group in advance, because in the past it was kind of like you got there at Hill Day and went, oh, hey, Brendan, you're in my group. What are we going to do? So now y'all have the hour to work, talk about what you're going to, how you're going to pitch this, how you're going to go over it, converse about the trigger lead legislation, so that when you get in the room tomorrow, you're not going, what am I saying? So that's the point of this working lunch.
And I'll be wandering around if you have questions. Also, scheduling these meetings is a total pain in the ass, and it was massive logistical lift. We organize our groups by region, and some offices are more responsive to others, and some groups are all from the same district. If you only have 1 or 2 meetings and you want to do more, let Rachel know. You can tag along with another group. We'll figure it out in the schedule. We did our best to get as many meetings for people as possible, but we also need to balance. You're not rolling in there 12 deep. That's ridiculous, right? We need to keep the groups small and manageable, but every group will have someone leading it that it will either be from Forbes Tate or a broker that has had these meetings before. So know that that will be the case. And if you go, it is different than you're going to expect in a lot of different ways. One, there's a good chance you won't meet with a member of Congress. That's okay. Staffers are important. You'll meet members of Congress tonight. I have a saying, it's not completely true, but by and large it is. Politicians are for pictures and handshaking. Staffers are for getting work done. They are not going to agree to do anything without running it by their staff first, so don't think it's lesser than because you met with the staff. Not true. You might meet in a hallway. Had the best meeting. We got a bunch of Congressional Black Caucus members on board with the trigger legislation last year from a hallway meeting. There's not a lot of space. The building's old. It sucks. And don't be put off by it. And if you are not comfortable, that's just sit and chill. Not everyone has to pipe up. It's okay if you don't say anything. Sit there and learn. It's totally fine. But don't be afraid to share your stories, like Jamie said. Don't go off the rails. And be careful about saying non-compliant things. But like, share your story. Absolutely, man. So it's going to be awesome. You guys are going to love it and be coming back for more.
This QR code will take you to the schedule website. You're going to have to log in with your information to see your schedule. If you log in and you don't see any meetings scheduled, come see me. It might be you used a different email than what we have in the system, because when the call to actions go out, we tell you to do it with every email you have, and so you might have 4 emails in the system and you're just using a different one than I use. So
last thing, and we'll say this again, tomorrow's schedule moved up a little bit. Congressman John Rose was supposed to speak at lunch, and now he needs to speak in the morning. So we're moving everything up 15 minutes. It is insanely important that you're at the Capitol tomorrow where you're supposed to be, which we'll have instructions for you on at 8:15. We're taking a picture at 8:30 on the Capitol Hill steps. It's going to be amazing, especially if the trigger lead bill launches tomorrow. And I can't tell you how important that picture is. Like, we're out here all the time. I'm down here all the time talking about how we're 1 out of 4 mortgages and this and that, and how many brokers there are and how great we are. If we don't show up once a year, which all of you have done, thank you, but we need tangible evidence of it. We want as many people in that picture as humanly possible. I know it's early. Get there. You won't look hungover in the picture. It's totally fine. So 8:15. The website's being updated right now. We good?
I think we're good.
All right, everyone. Have a good
Thanks,
lunch.
Thor.
Yep.